Next question. AB Limited is planning to acquire and absorb running business of XY Limited. So AB is acquiring company and XY is target company. The valuation is to be based on the recommendation of the merchant banker. So again the valuation point comes and it will be say based on the recommendation of the merchant banker. Consideration is to be discharged in form of equity shares to be issued by AB Limited. As on 31st of March 2020, the paid up capital of AB Limited consists of 80 lakh shares of rupees 10. Highest and lowest market quotation during the last 6 months were 570 and 430. For the purpose of exchange, the price per share is to be recognized as average of the highest and the lowest market price during last 6 months ended on 31st of March 2020. Balance sheet of XY Limited as on 31st of March 2020 is summarized below. Share capital is 200 lakhs, 20 lakh equity shares of 10, 50 lakh equity shares of 10, but only 1 rupee is paid up. It is 50 lakhs. Debt financing is 100 lakhs. Total is 350. Fixed asset is 150 and current assets is 200. An independent firm of the merchant banker engaged for negotiation have produced the following estimate of the cash flows from the business of XY Limited for the year ended 31st of March 2021 for 31st of March 2022 by way of after-tax earning for equity 105 lakhs, 120 lakhs. Terminal value estimate. Dear students, the term terminal value estimate stands for like this is end of year 1, this is end of year 2, then this is P2. Means end of year 3 onwards for perpetuity, whatever cash flows that the business is going to generate, all those cash flows are discounted in second year term. That is what we understand is P2. It is the recommendation of the merchant banker that the business of XY Limited may be valued on the basis of the average of aggregate of the discounted cash flows at the rate of 8% and on the basis of net asset value. Present value factor at 8% is provided. For the first year it is 93 paise and for the second year it is 86 paise. You are required to calculate total value of the business of XY Limited. Number of shares to be issued by AB Limited and the basis of the allocation of the shares among the shareholders of XY Limited. I request all of you to go through the question and then we'll discuss how to make the calculation of answer. I request all of you just to go through the question. So friends, over here, the question provides us like this. First of all, you are required to do valuation of the target company. How to do valuation of the target company? It has been provided to us like this, that the target company is supposed to be valued on the basis of the recommendation of the merchant banker. So the acquiring company and target company have agreed that see the valuation process is like unlimited, that is like never ending process. So let us rely on the expert opinion and whatever the expert will tell us, that is acceptable to both of us. So we have been provided with the information like this. An independent firm of the merchant banker engaged for negotiation have produced the following estimates of the cash flows from the business of XY Limited. So end of year 1, it is an amount of 105 lakhs. End of year 2, it is 120 lakhs. End of year 3 onwards for perpetuity, whatever you are going to receive, is discounted to second year end, it is 200 lakhs. This information is given by the merchant banker. Now, importantly, it has been given, it is the recommendation of the merchant banker that the business of the company should be valued on the basis of average of these two values. So again, friends, as I tell you, that's the mergers and acquisitions has implied valuation in it, inbuilt valuation in it. So we are required to make the computation of the value of the business using present value of the cash flow method. It means that say whatever you are going to receive will be discounted to your zero. Net asset value, that's very simple. It is the total assets minus total liabilities. Difference of both of them is net assets. That is the way we are required to make the computation of the two valuations. One is the present value of the cash flow and another is the net asset. Whatever the answers that we get, for example, just for time pass, this is 100 lakhs and this is 120 lakhs. Then value of the target company for the purpose of acquisition would be average of this two, that is 110 lakhs. And this is what's the answer that we are required to give in the first part of the question. So write down answer of the question. Answer for the first question. Valuation of XY Ltd for the purpose of acquisition. In the write down, working note number 1, calculation of value of XY Ltd based on present value cash flow. First year and second year. Cash inflow for the first year is 105 lakhs. Second year it is 120 plus 200. That is 320 lakhs. This is the way cash flows have been calculated for the first year and for second year. Okay, discounting at the rate of 8%. The first year factor is 93 paise. Second year factor is 86 paise. Present value 105 into 0.93. 97.65 lakhs. 320 into 0.86. 275.2 lakhs. Total of both of them 372.85 lakhs. This is the value of the target company based on the present value of the future cash flow. Working note number 2. Calculation of net assets. Of XY Ltd. It is total assets minus total liabilities. It is 350 minus 100, or total of this two. That comes to 250 lakhs. Next is value of XY Ltd for the purpose of acquisition. It is present value of the cash flow plus net asset divided by 2. So it is 372.85 lakhs plus 250 lakhs divided by 2. $311.425 lakhs. That is the way value of the target company can be calculated for the purpose of acquisition. Now there are other two questions. I request you to give answer for both of them in the chat box. So friends, over here, let us have understanding that say how to make the computation of the number of shares to be issued. Because the question says that say what is the number of shares to be issued by AB Ltd. We understand that say the question says something like this. The highest and the lowest market quotation during the last 6 months were rupees 570 and 430. For the purpose of exchange, price per share is to be reckoned as average of the highest and the lowest market price during the last 6 months. So whatever the market price of acquiring company for the last 6 months, of course it will also have that is the movements. So whatever is the highest price and whatever is the lowest price, we will take average of these two value, and that is what we understand is the value which is supposed to be considered in determining number of shares to be issued by AB Ltd. So over here we understand like this. So let us answer for the second part of the question. Number of shares to be issued. Share and amount. So if at all one share is issued, it is deemed that the consideration is discharged 570 plus 430 into 1 by 2. That comes to an amount of rupees 500. The consideration to be discharged is 311.425 lakhs. So for that, so this is the number of shares to be issued. So it is 311.425 lakhs into 1, that does not make a sense, divided by 500. So this is what's the number of shares to be issued. 62,285. Okay. Now going further. The question says further that what is the basis of the allocation of the shares among shareholders of XY Ltd. Dear students, we already have determined how many shares to be issued. Now the question says that say what is the basis of allocation. Now especially over here in this question they have provided something like this. Why? Because the paid up value of both the company's equity share is not same. 20 lakh shares are fully paid up and 50 lakh shares are partly paid up. So what we have to do, we are required to make the computation of the proportion in which shares will be issued. So 200 lakhs and 50 lakhs, so the total is 250 lakhs. This is 0.80 and this is 0.20 and the total is 1. 80% shares will be issued to them and 20% shares will be issued to them. This is the way, so there will be allocation of the shares. Write down answer for the third question. In that, write down basis of allocation of shares. We understand it is 20 lakhs and 50 lakhs. This is the number of shares, paid up value, that is important. It is 200 lakhs and this is 50 lakhs. Total is 250 lakhs shares. 62285. So what will happen? 200 lakhs divided by 250 lakhs into 62285. And the next one, it is 50 lakhs divided by 250 lakhs into 62285. So we understand it is 200 upon 250 into 62285. 49828 and 12,457. This is the way we are supposed to allocate the shares. So friends, over here in the first part of the question, we are required to do valuation of the target company using present value cash flow method, using the net asset method. Both of them are extremely simple. Then we are required to do average of both of them, that is value of the target company for the purpose of acquisition. In order to determine that, say, how many equity shares of acquiring company to be issued, we have to take average of the highest and the lowest price. And then say this number of shares will be allocated in this ratio. That is, say, the paid up value proportion, 4:1 proportion. Write down a small note for the answer. Terminal value means present value of cash flow at the end of year 2, comma, to be received from end of year 3 onwards forever. Means whatever the cash flow that you are going to receive from end of year 3 onwards for perpetuity, all of them are discounted to second year end, and that is P2.